And welcome out to the halftime report on this Monday. Listen, we got a massive week ahead of us in the markets. We got a monthly unemployment report, Fed meeting, OPEC meeting, like a third of the S&P reporting, and all kinds of other. It's no shortage, and we got a lot of action starting in the markets on a Monday morning. Small caps blowing off the top. Kathy Woodstock's doing very, very well. Clean energy. My brother Matt said right before in our pre-production, remind me the next time that the G20 meets to front run clean energy and Tesla ahead of that.
I think it's a play from now on.
I think it's listen, when Netflix has its next Tiger King Squid Games, just go long. And whenever the G20 meets, just front run that by a couple weeks too.
By everything Kathy would and just front run Tesla.
Yeah.
And don't get me wrong, Tesla had a really good earnings report, had some really good news coming out over the course of the last 3-4 weeks. But honestly, after listening to quite a bit of the G20 summit and hearing where their thoughts are, the only thing they like to talk about is clean tech anymore. Like they all get together and how they're going to save the world. And the market's like, okay, it tells that game plan, shows the blueprint, let's roll. And so, no, next time G20 meets, no, man, we're going to front run that.
The next time G20, I mean, seriously, listen, I don't know, Squid Games G20, it all feels like the same.
Feels like the market in 2021, actually.
I mean, seriously, we've had some crazy price action, and we're going to break it down in the markets. But like we always do, we start with the big boy. We start with the S&P 500. Yep. Obviously, really healthy price movement over the last couple of weeks. Man, I kind of like this trend. I don't like blow off tops. I don't like parabolic moves. And we had that strong surge at the start, but over the last couple of weeks, it seems like a little chugging along.
Some methodical drift going on in the market right now, Chucky. I mean, you've had some hesitation in the chart over the last couple weeks, but nothing to the downward movement in price. You haven't even seen the 9 EMA, which is the momentum support level that is kind of that indicator. It got close over here to the right of the chart last Thursday, but not even getting to the point where it kisses off and runs. Just the methodical drift in the S&P as you see this just stabilization, just work itself up the chart. You're breaking out of 4,600 here on the right-hand side. And so just, in terms of the price movement, I do think there's confidence building in the market. We did adjust the ranking of tackle trading on the market itself. We did have a 25 rankings coming into the market last week. We upped that in the scatter report meeting on Friday, up 5. And there was a little bit of hesitation there in upgrading the S&P, but the simple reality is the consistency of this trend. The market doesn't want to take a breather, and when one index takes a little bit of a breather, there's another index firing off, and that index today is the Russell 2000. And we'll get into the Russell 2000, but when the Russell wants to fly, it's hard to see a marketplace get too concerned when the number one index that is really associated to the cyclical areas, the economy, where that wants to run, a lot of the other things typically run with it. And so it's certainly a market that is building confidence as we start getting into that November season. Obviously, November 1st, hopefully everybody had a tremendous amount of candy over the weekend. I know I had my fair share too there. Me and my daughter were going around the neighborhood last night. I'm like, just give me a Reese's. Just give me one more Reese's. Let's do this. So hopefully everybody had a nice little Halloween, and market's coming in on a November saying, you know what? We're ready for Santa Claus. Walmart was ready for Santa Claus yesterday. Target was ready for Santa Claus yesterday. This market is saying, hey, we're ready for Santa Claus as well. Can it come? Can we see the continuation of it? Man, this market looks like it's a pretty consistent market right now. We felt comfortable enough upping the ranking to the S&P by 5. We were at a 25, upgraded based on 5, and the market certainly justifies it, in my opinion.
Yeah, and when we go to the NASDAQ, I mean, you see a lot of similarities. You see a lot of similarities in the NASDAQ right now. I mean, do you see any discernment? Because, I think people are always looking for, like, is tech outperforming or underperforming?
I mean, they've outperformed the recovery. They have outperformed the recovery, but again, that's not to be too too shocking. That's not a shocking thing. Remember, even 3 weeks ago, we were talking about it's coming from a lower point. The volatility works both ways. It went down more, it goes up more. That's what happens in growth areas of the market. They go up more, they go down more. They have a higher beta than the market does itself. And so it's not too shocking to see the NASDAQ outperform a little bit. But when you're looking at the price movements in the market, yeah, they're a little bit more expanded in the NASDAQ. Look at Friday, for example, but they're very similar type price movements. Your dojing similar, your upward movements of price are similar. And so I don't have a much different take on the NASDAQ than I do on the broad market, the S&P 500. Very similar. You might be slightly overextended, just given this short-term run has been fairly aggressive. But again, I got a very similar read on the NASDAQ right now than I do the S&P, and quite frankly, a little bit of the Dow Jones here as well. The Dow Jones, so if you're ranking all three of these, you're looking at similar price movements over the last 2.5, 3 weeks. But the simple reality is the NASDAQ has been leading that charge, the S&P being the barometer of the market, right there in that Goldilocks zone. And the Dow Jones has been underperforming it a little bit. But in general, they have been moving in line with one another. When you're looking at where you're really starting to see some firing off responses and maybe a shift in bias occurring in the market is the Russell 2000. And I'm not gonna pat ourselves on the back on this one, because we tested that breakout for 10 straight months, and we were all ready for it for 10 consecutive months. But this does look like the Russell 2000 is finally waking up out of the slumber that it's been over the last 10 months. Bear call traders on cash flow condors got to be a little bit concerned with this aggressive.
Yeah, Matt, could you give me a
upside.
longer time frame on this? Could you back it out? Because we've been trading in consolidation for so long. But I look back at the last time we had a strong breakout on weekly candles back, last October, November. We saw when it decided to run, you had a strong weekly candle. We're not there yet, right? Yeah. We're on Monday. We're still at resistance.
It's still Monday.
But after that, you had multiple weeks of just we're taking off. And if I had because one of the popular trades we do at Tackle Trading, it's a system we have, cash flow condors. You can go to the store tab at tackletrading.com, check it out. Is a cash neutral strategy on IWM, which has been a rock star for basically 2021. It's been a great trade.
Yeah.
But man, right now in this market, Santa Claus season, man, I want a piece of maybe that to the upside directionally. I definitely don't want to be trapped in a bear call spread if we get a strong break here.
Yeah, and most likely, where the market's at right now at 2350 versus where that higher end of the resistance channel is at 2360, 2366. The most likely scenario is those bear calls are upwards around 2400, unless you rode them all the way down at the bottom here, and then you could be threatened. But this is one of those price movements where you start to see that threaten that top end of the breakout range, and you're saying, okay, this type of movement certainly can build into another big candle, and so on and so forth. And so I do think you're assessing your bias a little bit differently coming into the Russell 2000 here today. Coach Tyler, he's got to be in a little bit of celebratory mood, and he's the author of Cash Flow Condors. But remember what he always says about that bear call when it gets blasted. He's like, so what? What's all your other positions doing now? Every single one of them are up going into it. And so you got a little bit of a natural hedge there, Mark, with the bear call side of the Iron Condor on the Russell 2000. But to me, and again, I'd like to see another upward movement, but to me, you're looking at that bear call saying, well, either one, I'm going to take it off and just let the market kind of run on top of this, or two, you're probably rolling it up and out a little bit, more of an advanced option management strategy. But yeah, you're looking at a Russell 2000 that is absolutely threatening the breakout. It's a no sell day, guys. And whenever you see that pop on the cash open, let's kind of go down to the 15-minute chart here. When you see that pop right here on the cash open, and then you just see it run, 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 the market's showing you something. It's showing you it's got a little bit of an appetite. It's got a little bit of a thirst. And the Russell tried to break out mid last week. It was a little bit overextended, not a lot, but it was a little bit coming in hot to that. Reset it, held support, and now it's breaking out and running again. You haven't broke out officially of that upper end of the range, but my goodness, it's getting very, very close to that. You got to like the price movement on the Russell. If you're a bull in the market and you've been anticipating Santa Claus coming, and you're coming out of a nasty, I don't want to say October was nasty, but September was slightly nasty. This is the price movement you'd like to see coming into the holiday run.
Yeah, I know. I mean, it is, like the markets are so fascinating to me right now. And will you give me Kathy Wood's arc really quick? I mean, just once again, a classic V, right? A classic V, down, up. I mean, what are you seeing here on the chart here? I mean, I know we got some resistance levels, and this, I wanted to get your take here. We got, if you just looked at the last week, right? You're like, this is some healthy price movement.
Well,
now how do you navigate when you got chop to the left, which refers to those previous peaks, and there's a lot of them, right? There's a lot of them.
Well, this is something that we discussed in the mastermind group for the STEP system last week when we met for that monthly mastermind group, about identifying where the real breakout is, where that real breakout is, because there's a million different breakouts in neutrality, right? And the real breakout, like we've been talking on the Russell 2000 forever, was 2300 by 2360. Right, we're looking at that. You have the breakout at 2300. That is front run into that 2360, but the real breakout is 2360. When you're looking at the arc right now from a technical perspective, because the Kathy Wood's got some makeup to do, Mark. She does. She's been underperforming the market this year. A lot of the underbelly has been a little bit, I don't want to say a little bit, let me say a lot inconsistent over the course of the last 6 months or so. There's been a lot of stocks outside of Tesla that has not done very well. And so when you're looking at the ARK Innovation Fund and you got to like the recovery, it's got catch up to do. And so breakouts could be very, very legitimate here as it fights up through the 200-day moving average for the first time, and that is definitely a breakout. But when I'm looking left of the chart here, I'm looking at 125 being a nice little resistance channel. 125 should trigger above to 130. 130's got some chop, but when you look at the 130 level, and I think that's the level that really does stand out here, when you look at 125 mark, or let's take the 200-day moving average. When it breaks out of the 200-day moving average, it's just staring at 125. When you break out of 125, you're staring at 130. But when you break out of 130, what are you staring at? You're staring north of 140, north of 150, and you're staring at 160. So the question is, where does the real action happen? Where are you really looking for, open like an open window here where without any resistance that really can attract those technicians and those algorithms? That's 130 to me. And so yeah, you most likely could see some front running as you, and I don't say that as a negative thing, guys. Front running when done appropriately, meaning triggers, you can catch a really good wave before it starts to get into that breakout. You got a high base as it consolidates, kissing off the 90 EMA, breaking out of the 200-day moving average. You should see it come into that 125, 126 zone as you start walking up the stairs and that 90 EMA starts building up steam. I see the real action happening here at 130. So as of right now, Mark, I like what's happening in this V-shaped recovery. But now as you start getting into these resistance levels, that's the levels you need to start tracking. 125, 126 being one of them. And then the second more important one, in my opinion, is that 130. You got some chop over here up to 131, but that 130 resistance level on the weekly chart, it starts opening up after that. And we've seen what can happen on right shoulder breakouts, Mark. Right shoulder breakouts after volatility have been very, very, very strong post-pandemic. It's been one of those patterns. We've given it a couple
They've been so
labels,
strong.
right? We've given it a couple labels: the king's bed, the right shoulder breakout. But again, it's after that dose of volatility comes in. You see that come in earlier this year. Stabilization happens, and then you see that once it clears up and it breaks out, it starts opening up and those algorithms start attaching itself to it, and then the momentum starts to build. And so I'm looking at 130. And I know that was a detailed technical response, but I really wanted to detail that one because you see this at 125 and you get excited. You see front running happening above the 200-day moving average. You get excited. But once again, where does the real action happen? For me, the real action on ARC happens above 130.
There's so many interesting things going on. Give me crude oil next. OPEC meets later on this week in a very, very busy week, Matt. Now, listen, Biden is begging OPEC to produce more oil. India is begging OPEC to produce more oil. Japan is begging OPEC to produce more oil. China refuses.
What's the princess saying, though? What's the princess? What's the Saudi princess?
China is not publicly begging because they refuse to do that, but they are privately sending.
They're doing it, yeah.
And the Saudi princesses are saying, listen, right, there's COVID out there. Honest to God, like seriously, like last week, there's COVID out there. We need to be careful about this. We still are in recovery mode. Like they're doing their best. Listen, we care, but Saudi princes are not budging. And you never know, right? Maybe a geopolitical power gives, OPEC and Saudi Arabia and Russia some sweetheart deal in some other area. But man, the rhetoric has been very, very strong that they are not budging. They have a pre-planned, that they've laid out for months, and they have been sticking to it. Matt, I mean, the chart, taking a little breather after a really strong run. Supply dynamics, the supply demand dynamics look healthy. Could OPEC here serve as a potential catalyst to take another leg up here if they come in and give them oil bulls what they want?
Well, they certainly can, and there's going to be some geopolitical commentary this week, obviously, as they get done with the G20, and there's been a lot of pressure on OPEC to open up those reserves a little bit and start pumping out a little bit more oil. But even on a day, think about it like this, Chuck, even on a day where China starts doing that a little bit, oil still goes up. And so, yes, even if they do something, they're not going to do anything radical. And I'm still looking at it, even in the face of all of this, I'm still looking at that 85 handle saying if 85 is broken, it's a quick journey to 90, in my opinion, and nothing they can say would stop that, in my opinion. So unless they do something crazy, right? You got a lot of momentum, and oil had a chance last week where you started seeing a little bit of shift in volatility. And we did, downgrade the energy space for the same reason this week, downgraded crude oil for the same reason, that slowing momentum, increasing volatility, double top mechanics at 85 type scenarios. And so it did get a downgrade for us over the weekend, both the energy space as well as crude oil down to 20. And then energy got a 5-point downgrade to 25. A lot of that was based on the double top, the slowing momentum, the slight, and I mean slight, but the slight increase in volatility. But all of that gets blasted if we break out at 85. And that's what kind of we're looking at here today is you're starting to build a little bit into that 85 breakout. Looking at this from an intraday perspective, you see the buildup coming here from earlier on the overnight action with the futures market. And what happens right here at the cash open? 85, 85, 85. And so you're just building resistance at 85. And so today I see this as a technical day where you're coming off the 20-day moving average. You got some degree of, slowing momentum. But once again, you're looking at that 85 handle saying, okay, slow down all you want, consolidate all you want. Give me 3-4, inside candles. Give me some slowing momentum. Certainly don't want to front run the breakout at 85. But if 85 is broken, you should see some price appreciation here.
No, it just really, interesting dynamics going on. And Matt, a thing that I am tracking in this area is you remember when oil went negative, like one of the events that you'll never, of course you remember, you'll never forget it, right?
Negative 41. I will always remember that trading day, because we were like, all of a sudden this story starts happening with oil, right? And all of a sudden, a bunch of us coaches at Tackle Trading, we start calling each other, and we hop on Zoom, and we're watching this live. Like, we're watching this live because none of us have ever seen anything like this before. And all of a sudden, I remember crude going negative for the first time ever, and it was like a negative $1, right? And all of a sudden, the second it went negative, all of a sudden the next tick was like negative 17, negative 30, and just all supply got cut. Like, no demand. People were begging to take oil, like physical oil. It's something that I never thought I'd ever see in my life. I really didn't. I never thought I'd see that. And yet we did.
One of the catalysts of that, amongst the many things that were going on, was that the Cushing supply, it was full. There was no place left to put
nowhere to put it. Yeah.
The opposite is happening right now at Cushing, and it's a story I'm tracking where they are starting to run out of reserves at Cushing. They dropped another almost 4 million barrels last week, down to 26. And who knows what the future holds, but a lot of people are speculating that, listen, if Cushing runs out of oil or gets dangerously low, you have the opposite effect happen, right? You have the opposite effect happen. I just want a piece of directional action.
Well, and again, downgrades are based on a little bit of a slowing momentum. The downgrade was based on a little bit of the shifting volatility, but what it was not based on, Mark, was the underlying fundamental argument. Remember, we take into account multiple different things in our rankings. We take into account the fundamental backdrop, but a lot of our week-to-week rankings are based on technical analysis. And so when you're looking at energy, the downgrade here in energy, and specifically XLE here, it was really based on a little bit of slowing momentum in the chart, a little bit of double top action. But once again, you break out 85, for me, it's rocking and roll back up to that original target of 90, which has been the target at Tackle Trading for, I don't know, long time.
Yeah, no, and a nice thing is a lot of these energy companies are giving you some reasonable patterns to potentially trade, and giving you some time, right? Like, giving you some time, that they haven't broke out yet, right? Just put them on a watch list. Put them on a watch list.
Oh, go ahead.
Oh, no, I was just going to transfer over to Bitcoin next.
Oh, yeah, let's talk a little bit.
Now, Matt, my question to you is a potential king's bed forming on Bitcoin.
I don't think so, and the reason I don't think so is you know me, Mark. I like to be accurate in how I label technical patterns. I got this as a retracement. That's
just
what
good old-fashioned retracement.
It's choppy, and that's why I think people might be looking at that right shoulder, and again, the right shoulder being right here in that 64,000 level. People are looking at saying, hey, is that a breakout? And I would call that a breakout. I would call that secondary confirmation. But I got this as a retracement. And the reason I got this as a retracement is because, again, to have a king's bed, you have to have pivot confirmation. And you don't here. You have 1 to 2 upward movement in price. You have 1 to 2 downward movement in price. That's just volatility. That's all that is. That's just inconsistency and volatility. But again, you really don't have any pivot confirmation from an upward to a downward movement in price, which means no daily resistance level was established, no daily support level was established outside of the natural, normal way we do that from a retracement perspective. And so I just got this as a bullish retracement. But again, even though that, we may agree to disagree, and I'm not saying you do, I'm just saying technicians may agree to disagree. I think we're all looking at that same level. I called it confirmation on Friday. I maintain that confirmation because I do have it as a bullish retracement, and we did go above the previous day's high. But the price point you're looking at is what I think is important here, Mark, and that's right there at that 64,000 level from an intraday perspective. It has played out as a resistance level multiple different times over the course of the last week. You see it here a week ago, last Friday. You see it ding up into there multiple times, does the same thing on the overnight weekend action, Saturday, Sunday, Monday. Coming into the futures market, you see that same thing occur last Friday, last Thursday, you got up into that range as well. And so even though I wouldn't technically label it a king's bed, because to have a king's bed, you got to have some degree of neutrality, which means you have to have pivots confirm that neutrality. I got this as a bullish retracement with secondary confirmation of above 64,000.
Yeah, no, I mean that little. I mean, I have that 64,000 level as a ad exposure event. So, I mean, you would agree with that?
I would agree with 64,000 being a number that stands out from an intraday perspective. I would agree that that would be secondary confirmation. But again, and these things might be to the layman, they might not mean that much, but to technicians, they mean everything, because those were how you label a pattern is how you're going to trade it. And so based on that bullish retracement, I do have confirmation as of last Friday with secondary confirmation above 64,000. But again, however we get to that 64,000, you labeled it the same way that I labeled it. We're all looking at 64,000 saying, if we can get back up above 64,000, the intraday levels of resistance are now broken, which means they now act as a little bit of a support level. I definitely like that. You're probably staring at a little bit of 65,000, and then obviously you're working yourself up into the all-time high at 67,000. But I do think 64 stands out for me, yes.
No, I mean, little news on Bitcoin, and we're going to talk a lot more about Bitcoin on the Trading Justice podcast today.
Bitcoin proxies there, Chucky.
Yeah, I wrote a 4,500 word article on a beginner's guide
Is it posted?
It's not posted yet. It's been edited. Okay. It is ready to be posted. I put it in our internal Slack channel, but it will be posted today.
So is it waiting on me to read it and approve it? Is that what
it's waiting on some power that be that has the authoritative say that says, listen, this isn't garbage. We're going to post it on the website.
Tackle, do you want me to release Mark's Bitcoin proxy 4,500 newsletter without reading it? I just want to get it out there because I know you do quality work, Mark. Do I have to read it?
It is a beginner's guide to Bitcoin proxies. Yeah, what it does, and it's not necessarily designed to like read in one setting. It's designed to like have as a reference point, to look at Bitcoin miners and some of the things, Bitcoin ETFs, some of the other, like this big long reference guide that you can go look at when you want to learn a little bit about Bitcoin. I talked a little bit about how Bitcoin works, some of the key terms like hash rate and block, some of the fundamental factors, and then went over a lot of the different production rates of different miners. Talked a little bit about other proxies. So yeah, listen, I think that, the Bitcoin world is a fascinating world. It's treated me very well, treated anyone that's been involved with it.
Can I ask you a couple questions? I haven't read it. And usually how this works, Tackle, is Mark's writing a wonderful newsletter and basically Tim or myself reads it just to put it out there, right? But we'll get it out there for everybody.
To make sure I wasn't on a drunken binge when I was writing, We
don't need to talk about the checks and balances and why they exist there, Chucky. But the question I have for you, because I know you put in a lot of research, a lot of time into understanding this area of the market, and I'm not just talking about the newsletter you wrote for the Trading Justice podcast, but just in general. We've been talking about BITO as a potential, as that potential proxy for Bitcoin, right? In all of your understanding now, where would you put the proxies? What proxy for Bitcoin do you feel is the best tradable instrument at this point?
I believe it is BITO. I believe right now, and once again, a third ETF is scheduled to get approved this week. We're not going to have a shortage of ETFs.
Oh, we're going to have a lot.
And eventually, there's scuttlebutt that maybe next year, mid next year, sometimes late next year, we're going to have an ETF that is based on the spot price, right? And so from a pure proxy standpoint, and it doesn't mean it's the best tradable instrument at any given time. I mean, look at Coinbase pattern. That's a pretty little bullish breakout.
Oh, high base breakout, front earnings. Let's
that,
go.
That's a pretty pattern. So it's because at any given time there could be really good opportunities. Like I thought there was one on Mara a couple of weeks ago to play some catch up. What I believe is the best in breed of the Bitcoin miners. I think Mara set the blueprint, and we'll talk about this on the trading.
So Mara is kind of the miner. Coinbase is kind of the finance company. BITO is kind of the ETF that everybody can get access to. There's going to be a lot of options out there. I think the ETF for me, as of right now, would be BITO. The miners, honestly, I just kind of whatever you say, I'm good with.
Yeah, no. And the reason but all things being equal, I do believe that Bitcoin 5 years from now, 10 years from now, 15 years from now is going to be at potentially elevated prices. I don't know if I'm a Michael Sawyer, the CEO of MicroStrategy, who says it's going to have 100 trillion market cap. Kathy Wood says a 500,000. I don't know where it ends.
How many trillion? Because
100 trillion.
You better get ready to talk about what happens to the dollar in that environment. But okay.
People have their outlook.
There's always yin and yang to those analysis. If you are projecting a currency like this or a commodity like this to go to that such market cap, what are you saying it replaces? Because it replaces things.
Michael Sawyer's main argument is that it just becomes an institutional aspect of that the volatility dies down.
$100 trillion market cap. That's a reserve currency that kills the dollar. I'm sorry, that's not just an institutional argument.
that is Bitcoin. What? That's you got to add two zeros to it, so that would be Bitcoin 6 million.
That's hyperinflation in the U.S. I know that. All I'm saying is when we get into these, oh my God, let's say these big numbers. Well, how do you get to those big numbers, guys? What comes down? What does it replace? Let's have that conversation too. It just frustrates me a little bit when I hear people just say, "Oh, this asset class is going to go up by a quadrillion %," but there's nothing bad going to happen to anything.
And I love how they're always even number. Like Tom Lee called for Bitcoin 100,000 in the year. I'm like, why can't someone say, my prediction is 84,362?
Because that doesn't sell stuff. That's all it is.
And that's, a lot. But the main point is, I think it's going up over time, right? Whatever it lands at.
I think we can all agree on that general philosophy is that Bitcoin's market cap will exceed the current value of today. Yes, we can all agree on that.
And so as such, from an investing standpoint, I want as few, and once again, I trade the miners all the time in Coinbase and all this, but from if I'm not going to trade, and the one thing I like about BitTo is it has the option availability, so I can do cash flow tricks. But I don't want other variables potentially spoiling that party so that, if Bitcoin goes up, BitTo is going to follow suit without the other necessarily variables that might over or underperform at any given time. And so, want a piece of that longer term directional action. And because BitTo is currently the most liquid, we don't know how that will play out over the years, but currently the most liquid and management fees will come into play. But I think I can offset that with cash flow by quite a bit. I just want some of that directional exposure, in my own personal portfolio. And so for me, it's BitTo right now, as far as the Bitcoin proxy I like the best.
I think that's where I'm at too. And again, for me, I think it's Coinbase still, just because that's kind of the stock I've chosen as the proxy. But again, I think I see Coinbase kind of as the bank of that bunch, and Mara as the the miner of that bunch, the Barrick Gold, if you will, those types of things. And then the BitTo is the ETF that really is leading the charge from a liquidity perspective, and the liquidity is specifically from an options perspective. I think the Pro shares are going to be fine. Pro shares are typically very liquid, and again, that's going to be important on BITO, because I think for a lot of us traders with BITO, it's more about what we can do in the options market with protection and cash flow than is the directional aspect. From 2013 on, traders have taken directional risk in Bitcoin. I think they're really looking forward to those really good cash flow environments as well.
Yeah, and let's just and we're going to talk once again. We're going to talk about a lot of Bitcoin proxies in the Trading Justice podcast that will be released later tonight. Yeah, just gold. Give me something, Matt. Here.
I don't have much. We downgraded based on the breaking of support, a little bit of volatility shifts. I'd say a little bit because gold's been very volatile over the last few weeks. But I really don't see this as a shifting character. This is kind of par for the course with gold over the course of the last 2-3 weeks. Ever really since the breakout candle here, it's been a choppy, it's been a volatile ride. And whereas when I said that about going long on Tesla a month before the next G20 meeting, I might just say just stay away from gold in that environment because it's been a choppy mess and it's been a volatile ride. I still maintain 1800 by 1840 is kind of that zone where you can see some of gold analysis getting cleaned up, but it doesn't get real clean for me until that upper end of the channel above 1836, 1840 is actually broken. And so we got a distance between now and then. For me, you're just looking at the environment as we start getting into post-earnings analysis. On materials, kind of stabilization at the top end of the range. And then when you take a look at the miners here, GDX for the miners, you're looking at a little bit of a fight at that 50-day moving average. And Mark, this to me as of right now is a choppy, nasty mess of a bullish retracement. And because again, we really, as that build up in GDX occurred, you really didn't have great technical patterns. You had a V-shaped recovery. Remember, V-shaped recoveries can be very choppy. They can be very inconsistent, and their patterns aren't exactly fantastic. This is a bullish retracement fighting on the 50-day moving average on GDX. I like its ability to maintain, but once again, I do think you're kind of entering into a little bit of a general philosophical viewpoint of equities starting to shore themselves up. Maybe Santa has already started coming to town, and that momentum continues. The mid cap, small and mid cap indexes are firing off here today. ARK's firing off. You gotta like GDX's chances at the 50-day moving average. Confirmation would be solid. You'd be looking at that 34 handle and ultimately maybe even a break of that upward 200-day moving average over the next, say, 3 weeks or so. But again, I do think generally you're looking at gold and gold tradable instruments more as a cash flow instrument at this point as it navigates this choppy V-shaped recovery.
Man, listen, the markets are fascinating right now. And Matt, we got a lot going on this week. Earnings season, huge amount. Unemployment report, OPEC meeting. Everybody knows what the number one event is. And if you don't, then come join everyone. We're a friendly bunch over in the Everyone gang. Fed meeting on Wednesday, where it is widely talk about priced in. It seems like the only question is twofold. And tell me your thoughts on this as someone I categorize as a Fed expert. We have that tapering either starts this month or the month of December. It seems to be the debate. The only that, and then just how hawkish, dovish is Jay Powell in his speech in terms of inflation? Does he make it feel like they have a hold of inflation, or is he still going to be in the, hey, this is still a transitory, even though they've moved away from that language lately? You're not allowed to say transitory anymore. If you notice,
are they to the point of saying it's good for us?
No, they haven't quite reached that point yet.
They haven't passed that evolution yet, because that's coming.
Yes. All of that extra money you're spending, it's good for you. Just, accept that. But, what are you expecting out of the Fed? And it seems like it's almost like, and tell me what you think about this take. The market is just going to celebrate almost whatever they say, unless they say something cataclysmic.
I don't think the Fed can be more hawkish than the market is on interest rate policy right now. And the market's moving up in the face of those increasing projections from an interest rate policy perspective. And so for me, I look at the Fed this week, thank you, honey, and I certainly expect the Fed to address the tapering question, right? And it's been widely anticipated that November or December is going to be the start of that. It seems to me like it's an easy announcement at this point. The entire market is anticipating more interest rate hikes than you are prepared for next year, in my opinion. And so it's time to taper. It might have been time to taper a year ago, but it is time to taper. Number one, the Fed has signaled, number two, that it is going to announce tapering, and it is widely anticipated to start either this month or next month. The starting point to me isn't really important, though. The ending point is. This does look like they're going to, and again, all I can do is read the tea leaves just like everybody else, but it does seem like a six-month tapering program at $20 billion a month. That does seem like the normal course that the Fed is going to take. They want to be done with tapering by the end of the second quarter next year. Most interest rate projections do see liftoff after the second quarter of next year. That would fit the timeline for tapering to come to its ultimate conclusion, then address liftoff from an interest rate perspective. But Jay Powell has said tapering is not liftoff. Nobody believes every time he says that. I don't believe him when he says that either. It does seem like the normal thing to do before you would lift off is to reduce the monetary support you give the system. And so it does look like we're in the face of a 6-month tapering that's going to either start in November or December with an end date 6 months, somewhere towards the end of the second quarter. And it does look like we're looking at a couple interest rate hikes coming into at the back half of next year as well. The only thing I'll say to everybody on Wall Street, and they know this as well as I do, there's a lot of things that can happen in 6 months. There's a lot of things that can happen in 6 months. I think the market's being a little too hawkish from my understanding of the Fed over the last 10 years. So the only thing the market needs to do is puke up honestly, market, this is simple. All you got to do is this. I know, Jay Powell. Front run Christmas, blow off Christmas. Everybody's going to be concerned about interest rates coming after Christmas. Let's puke up January. He'll come off his interest rate hikes, and let's have a great February through December next year. We know the game plan at the Fed. The market manipulates the Fed, not the other way around. So it's going to be interesting to see what the Fed does ultimately with interest rates. But as for the question of tapering, it doesn't seem like there's a question anymore. It seems like we're just going to either start this month or next month. We're going to probably attach 20 billion in tapering month after month for 6 months until they're down to zero.
It's going to be a fascinating week, and not saying that as a sales pitch. We are going to have a lot of data at the end of the week. Unemployment report.
That's also why the Russell 2000 isn't a breakout on the weekly chart till it ends the week, Mark. You're staring at 167 S&P 500 companies that are reporting earnings this week. You got the Fed this week. We just got out of the G20. You got Congress coming back to maybe even vote on some infrastructure deals. And so it's going to be a big week in the market. There's no doubt about it. Stay with us as we navigate this week together as a community.
Yeah. Let's get into sectors. Every Monday we do a sector roundup. Where we, because you're always looking for where the strength is, right? Because, as traders and investors, we're not just blind buy and hold investors. We're always looking for what can give us an advantage. You can't invest in everything. And so you're always trying to look at where can I tactically move money to that might show us some strength. Sector analysis has been a rock star in 2021 and is giving you valuable insight of where to tactically attack the market. So it's always worth looking at the chart. Matt, what area? You want to start with the growth areas of the market?
Let's start with the growth, but before I get into sectors, just let me give a quick earnings update. I know we don't have earnings on Monday morning, but in terms of just an overall earnings update, a big week in earnings. Now, last week was the biggest of the quarter. That's when you have Amazon, Apple, all those big dogs report earnings. You don't have the big names reporting earnings this week, but you do have a plethora of other companies reporting earnings. 167 S&P 500 components reporting earnings here this week. And again, not the big names out there, but for example, in technology, you got Qualcomm and MSI. In comms, you got Activision, you got the gamers in comms. And I'll go through a little bit of this as I go through as in the sector roundup here in just one second. But from a macro perspective, these are the numbers as we see them this season in earnings. Number one, 56% of companies have reported earnings. We are through the bulk of earnings so far, and the big names have already reported. So again, we're only about 56 reported, but it feels like 75 once you get done with like Microsoft and Apple, because a lot of the 167 companies reporting earnings this week in the S&P, not everybody can name those companies. Everybody can look at Apple. Everybody gets anticipation over Amazon and those big names out there. But right now, 82% of companies are beating the S&P, beating the EPS expectation. The 5-year average is 76%. Now, Mark, for the most part, most market participants are seeing earnings this quarter as a big catalyst for price appreciation. I'm not there yet. And the reason I'm not there yet is context matters to me. Right now, yes, 82% of companies are beating the 5-year average. I'm sorry, but I cannot compare S&P 500 earnings this year against 2017, 2018, 2019. There is a starting point for me, and that is March of 2020. That's the pandemic. All of this is post-pandemic analysis. And by the way, these numbers right now are rock star given where they're coming from. There's a lot of people, including myself, have a little bit of concern for 2022 from a growth perspective, given now the future movement is not going to be based out of pandemic responses, but it's going to be based on these numbers as we see here today. And so when we're looking at this 82%, it's good in relationship to the 5-year average of 76%, but it is not good, in my opinion, in comparison to the first and the second quarter of this year when you saw mid 80 beats in terms of a EPS percentage. So a little bit of a down from the previous 2 quarters, but very good from the previous 5 years. Now, when you're looking at the revenue number, that's coming in at 76% right now. So 76% of companies are beating the expectation on revenue. That 5-year average is 67%. Same commentary on the revenue beats, though, given the fact that last quarter, low 80s beat, the quarter before that, low 80s beat. And so a little bit of a down from an earnings response perspective, but again, still very healthy above the 5-year average. The number one number that I've been telling the community of tackle to be focusing on, though, from a earnings story has been the blended growth number. That blended growth number starting out this quarter at 27.5%, 27.6%. That number, we said this 3 weeks ago, track that number above 30. If it gets above 30, you're going to see growth arguments that outweigh the concerning current environment from an economic perspective. And remember, any concern people have, they can overcome that concern. And again, we have concerns about markets, we have concerns about politics, we have concerns about economics all the time. But we can overcome that concern from an investor perspective if the growth outweighs the concern. And so when you see this wall of worry dissipate over the last 3 weeks and the markets start to behave like it's 1999 again, it's because the growth is outweighing the current concern. Right now, you're seeing that 2 weeks ago, that number creep up into the 30%. Last week, it got into 32.6%. Now, after Apple, after Microsoft, after Amazon, after the 150 companies that reported last week, remember that blended growth coming into last week was only about 24% of the companies reporting. Now we're at 50, in those mid 50s reporting. That growth is at 36.6%, ladies and gentlemen. That's what's happening in the market. Whereas average layman in the market, they look at the wall of worry and they're like, oh my goodness, we have this and this and this, and we have this and this and this. Well, those things are overcome as market participants if they can attach themselves to a growth story. This growth story has been real. We've been seeing an increase in the numbers in the market. And I think this is I do think this is going to be the high point for earnings. I think we're going to contract after this because, again, we're done with Apple. We're done with Google. We're done with the big dogs. We're done with those high flyers. So I do think it comes down a little bit. But overall, that number at 36%, really, really healthy growth number. It's been inching itself up from 27.5 all the way to 36.6. That's a big move in 3 weeks from a blended growth perspective. And so why this market is solidifying itself is it's attaching itself to the growth story that has been playing out from an earnings perspective. Now, when it comes to the sectors here, obviously we categorize all the sectors 3 different ways. You have your aggressive, which are your growth. You have your cyclical, which are very economically sensitive, and then you have your defensive, which are typically seen as a little bit less volatile, a little bit more safe havens, higher dividend payers over there as well. When you're looking at the growth areas in the market, technology, communications, as well as the discretionary areas of the market, I'm going to start with discretionary, Mark. Typically, I do start with tech. But discretionary is our highest rated sector at Tackle Trading. Right now, discretionary got a 5-point upgrade into that 15 area. You got the momentum playing out here. Really like the consolidation high base, like the breakout here. Momentum has certainly been occurring in discretionary. A lot of this is tied to the price momentum that we've been seeing in Tesla. When Tesla hesitates, discretionary hesitates. When Tesla breaks out, discretionary breaks out. Now, everybody and their dog who always was like, discretionary can't move without Amazon. And I was one of those. Discretionary has moved without Amazon.
Discretionary has moved just fine without
about Amazon. Does not care because you know what it cares about? Tesla. That's what it cares about. So when you're talking about the momentum in discretionary, you got to really like the momentum here. You got to like the breakout. But in the back of your mind, you're also saying, listen, I am attaching myself to Tesla to a certain extent. And so make sure you're tracking both of those two. Now, from an earnings perspective, from an earnings perspective, you do have a couple companies reporting this week in the discretionary space. Booking, number one, that's the biggest market cap company in the discretionary space that is reporting this week. Keep an eye on Booking this week. It's been consolidating over the course of the last 8 months, firing off here today, very similar to the Russell 2000. The number that I'm looking at here on Booking is 2,500. A breakout at 2,500 could be legitimate on a multiple time frame perspective and certainly add a little bit of that bullish momentum if it does play out that way this week with Booking. But for the most part in the discretionary space, you're really going to be talking about the casinos this week, Mark. You got MGM reporting this week that's coming out of a little bit of a flag-based pattern. You got Penn National Gaming reporting earnings this week as well. And then you have CZR also reporting the earnings this week. And so for those gaming type companies, expect a little bit of more volatility this week. And again, certainly can play a role on whether or not discretionary continues to move. A couple stocks to keep your eye on here in the discretionary space. We already talked a little bit about Tesla. Oh, Crocs. I got to say it one more time. Crocs. What is it? You say Bloody Mary, what, 3 times or 5 times? And Candyman 3 times or 5 times? I can't remember. I've been in Halloween moment with my daughter. We've been watching a lot of Halloween movies.
Dude, if you say Crocs 3 times, one of those ugly pairs of shoes better not appear on my feed.
If you say a 5, it appears on Mark's feed and is put there by Coach Frank and Coach Christian. When you're looking at Crocs here, though,
dude, Crocs will always be the proof to myself that I don't know anything. Because I still don't get it.
Listen, if you are a know-it-all in life, the market will teach you very valuable lessons.
It absolutely will.
Very, very valuable. If there's anybody in your life that needs to be humbled a little bit, just send them to the
Become a
market. Just
professional investor.
send them to the market a little bit. But you got just keep an eye. A couple stocks to keep an eye on here. I like the breakout of 160 on Crocs. It's got multiple time frame analysis to it. And then a stock we talked a little bit in with Coach Frank on Friday. Off the whale a little bit, but BBWI, Bath, I keep saying Bed Bath and Beyond here. Bath and Body Works coming off a nice flag-based momentum pattern, kissing off, confirming above 70 here today. So keep an eye on that as well. So casinos, Mark, that's kind of the earnings, that's the earnings in discretionary. Obviously, a lot of this is about what's going on in Tesla, so keep an eye on Tesla as well. Now, looking at the technology space here, XLK. Technology got an upgrade at Tackle Trading over the weekend as well, coming in at that 25 handle. Earnings for the most part, and don't get me wrong, we got 25 technology companies reporting earnings this week, Mark. But I'd bet quite a bit of money most people couldn't name them, because they're all these smaller semiconductor companies, they're smaller software companies. They're not exactly the big dogs.
There's not a lot of headlines.
Microsoft, so on and so forth.
Yeah, we don't have the headline names in previous week, but what we make up for headline, we make up for in quantity.
And that's what's happening here this week. Smaller companies, but there's 25 of them. And really, it's like Qualcomm, MSI, those types of companies here. But a couple companies to keep an eye on here that we got our eye on here a little bit. HPQ coming off a nice bullish retracement, combination of the 9 EMA, 200 SMA breaking out. You asked me about the right shoulder breakout. Well, this is a right shoulder breakout here on HPQ, coming in with confirmation here today. That was on the options report. Maybe it's the stock report. I can't remember. And then my trade of the week here, Mark, was in the tech space. It was Marvel. I love me some Marvel. Nice little high base pattern, kissing off the 9 EMA. Confirmation would happen above $69. So keep an eye on Marvel as well. Now, when we're looking at the communication space, it's fascinating, this space, Mark. I am truly fascinated by this space. And the reason being is very simple, Mark. When you're looking at earnings, this market has been an earnings storyline the last 3 weeks. Would you agree with that?
Oh, absolutely. Yeah, whether you call it a theme or a party or whatever, that has been the catalyst.
That's been the catalyst, 100%. Okay, so XLRE here, XLRE. Real estate in the last 3 weeks has went through a recovery, right? That has attached itself to that growth theme, right? Well, some of that is because out of all the real estate companies that have reported earnings, and we still got a few, you got 14 real estate components reporting earnings this week, led by Equinox as well as SPG. But you're through a lot of big time real estate companies out there, the REITs out there. Well, Mark, when you're looking at real estate here, you've fired off these lows, right? And when you're looking at the price response, understanding the earnings response, you can understand that, especially with the fact that of all the companies that reported in real estate, not one is missed. Not one. You have 93% of companies
I did not know that.
Above the expectation. You have 7% of companies that are reporting in line with the expectation. You haven't had a miss yet. Now, you might have had a miss in comparison to how I do it, Mark, because I do it like
sure.
Right? But in terms of general mechanics, you haven't had a miss yet. It is the only sector that has not had a miss is real estate. The next best sector is not technology, which is fired off. It is not discretionary, which is fired off. In fact, Mark, discretionary is the 7th best sector from a beat versus a miss perspective. Discretionary is, okay? It's had, I believe, 22% of the companies miss here. 22. All right. It's the 7th best one. It's the best from a price because, again, we're going to buy Tesla in front of every G20 meeting from now until the history of mankind. And so you've had that front running perspective with Tesla, but this really hasn't been an earnings storyline with discretionary. It's been a Tesla storyline, and everything else has appreciated in response. When you're looking at communications, though, XLC, Mark, you would think communication was garbage in earnings season. It hasn't been. Communication has had the second best earnings season to date. The second best. It has only had 9% of the companies below the expectation. 91% of companies right now are beating the expectation. 91. Only surpassed by real estate at 93%. What's happening here then? Well, what's happening here then is very similar to discretionary, which is not necessarily a earnings storyline. Remember, the earnings storyline is a broad market storyline. We're talking about sectors here. Remember, the rising tide raises all the boats. There's got to be some underlying reasons to continue to see that propelled, though. It's not going to raise them forever unless the underlying fundamentals also support it. And so when you're looking at communications, 91% of companies right now are beating that expectation. Not one, 9% are missing it, 91% are beating the expectation. Why is this the only sector that is being held back? Well, has a heck of a lot to do with Facebook, which is not an earnings storyline, right? It has some to do with Twitter, which once again, not an earnings storyline. Has a hell of a lot to do with AT&T, not an earnings storyline. Has a lot to do with the gamers of Activision and EA and Take-Two, not an earnings storyline. Okay, has a lot to do with these overriding macro storylines for Facebook, for example. And Mark,
Matt, if that earnings wasn't coming up on Activision, man, I'd give that little pattern a go.
Listen, if you just wait a second there, brother.
That's a pretty little pattern.
When you're looking at Facebook, when you're looking at this entire area, the underlying earnings has supported communications as much, if not more so, than other sectors. Once again, what's been holding it back in the gamers aspect? And again, comms is an index in and of itself. In the gamers been tied to that Chinese storyline for 6 months now. For 6 months now, what are we starting to see? We're starting to see a little bit of bottoming action there. We're starting to see a little bit of bottoming action, and they have earnings this week. Take-Two, EA Sports, Activision, all has earnings this week. And whereas you saw that earnings, you're like, oh man, I love that technical pattern on Activision. Well, so do I. I love that technical pattern on Activision. But don't you love the sector if you get a blowout here?
Yeah, big time.
Okay, and so that's what I'm seeing here is the areas of the market in comms that are concerning. Until Facebook, I don't even want to say until, because I don't think Facebook's ever going to get it together. I just don't. But that doesn't mean their price doesn't get it together. Facebook's been a juggernaut from an earnings perspective for a very, very, very long time. But when you're looking at this sector, this to me is a sector that is not about Google at the top of the market. This sector is about what happens with the bottom of this sector. And if the bottom of this sector really starts to solidify itself, I think there's going to be some awesome opportunities from a longer term perspective. I don't see great trades here in communication. I might see great opportunity from a longer term perspective when you're looking at the bottom of this market, and specifically a couple of spaces that have been concerning. When you're looking at those telecom, Verizon's been in a downtrend for quite some time. It broke out of that 54 handle and it just got absolutely blasted, had earnings last week, and it's starting to stabilize at the bottom of the areas. AT&T, earnings last week's been in a prolonged bearish downtrend. What does earnings do? Maybe sees a little bit of stabilization here at the bottom of the market. What has earnings coming up this week? Well, Activision, number one, has earnings. You're starting to see reversal characteristics. You're coming from the low prices. Earnings to me is going to be very important here on Activision. Couple that with EA's earnings this week. You also have Take-Two's earnings this week as well. So then when you're looking at the communication space, Obviously, we're looking at Activision, we're looking at EA, we're looking at Take-Two this week, but we're also tracking the bottoming behaviors of Verizon, AT&T, and I kind of think T-Mobile here reporting this week might have something to say about old AT&T and Verizon's bottoming patterns as well. And so whereas a lot of these other sectors, we're looking at the breakout and fighting against breakouts, it's really the bottoming behavior of communications. Earnings has been stellar for this area of the market, but the general overriding themes of this area of the market have not been stellar. If those start to get a little bit more clarified, you can see comms fire off, and that can catch up with some of these other sectors. And so right now, communications stuck right there in that 45 handle for us at Tackle Trading. Our lowest rated sector is communications, but once again, that can start to creep up itself up very quickly if the bottom of this sector starts to solidify itself. And again, we're looking at the gamers reporting earnings this week. We're looking at Verizon and AT&T in response to T-Mobile's earnings this week. We're also tracking other companies like, the top of the area of that market, i.e. the top of the market, Google and Netflix obviously have been very good. They've recovered. Google has recovered very well. Netflix was front running this recovery forever and is an absolute gangbuster. This area of the market is really about the bottom of the market though, and seeing it solidify. It has an opportunity this week as we're starting to get a little bit post earnings in front of some of the gamers, in front of T-Mobile. But again, I think this storyline is going to be playing out a little bit this week. So stay with us as we navigate the communication space this week. But Mark, again, when I just saw it, like the entire market has attached itself to a growth storyline except communications. And yet communications has one of the best earnings backdrops so far. What's holding it back? Those areas of the market, the bottom of communications. If it solidifies itself, you're going to see a little bit of an opportunity play itself out in front of your very own eyes.
And Matt, that was fascinating. And we've seen that when things do solidify themselves and you get that upward movement can be fast.
It can.
Upward movement can be fast. And so if you have a positive fundamental backdrop, some of the patterns even out, start to get to that upward movement. Well, people start to pile on, shorts start to cover, and we see the effect. Put it on a watch list.
And the reason I bring it up is I got this. I feel like comms is undervalued in response to the rest of the market right now. And it's riding through some of these overriding themes that are driving it. But again, when you look at the price charts here, you're seeing a little bit of neutrality. 80 is held multiple different times. You got the backstop of the 200 days slightly under that. And I just kind of feel like the combination of this looks really simple to me at this point. If the underlying fundamentals are solidified, if the bottom of this area of the market starts to play a little bit more offense than it has defense in the last two and a half weeks, you could see a breakout of the right shoulder, which would be the 50-day moving average right here at about 82. You break out of that 82 level, I'm not going to call a shot yet, but I'm going to tell you right now, it reminds me a hell of a lot of what happened in energy. As the rest of the market was partying a little bit, energy just was stuck in the mud. But Once it reclaimed that $50, once it really truly did break out, look at the price movement. I feel like communications has not been participating in the bull rally, but the fundamental backdrop, which we start off this entire conversation, Mark, with Mark, what is the market embraced more than anything the last 2.5, 3 weeks? The fundamental earnings backdrop, correct? Communication hasn't, but the communication reports support it as well. It's not like communication stands out from a bearish perspective. Not one company's missed here yet. Now, again, we got the gamers to navigate and T-Mobile to navigate this week, but I just kind of have a feeling that if we're looking at this 82 and a half handle, we break out of that, there could be a little bit of a hit parade coming into comms really, really quickly. And so whereas a lot of people are going to be talking about Netflix, and rightly so. Netflix has been a juggernaut. Netflix has done amazing stuff. Love the price movement on Netflix. And whereas a lot of people are going to be tracking, oh, Google at the all-time high, breaking the all-time high. That's not the story of this sector. That's the standouts of this sector. This sector is told at the lower levels, the Disney navigating support, Activision's reversal pattern, T-Mobile, AT&T, Verizon, all looking at potential reversal analysis. So that's where this story is being told, and the sector has been pricing that in. Can we see a breakout? Can we see those fundamentals catch up to what has happened in technology over the last 2 weeks? Maybe, maybe not. But again, I'm looking at 82 and I'm waiting for a breakout of 82. But that is the aggressive sectors. Let's talk a little bit about the cyclical areas of the market. And Chucky, I'm going to start with the energy space. Obviously, we were talking all week long about Exxon, about Chevron, their amazing earnings earnings numbers. Price response has not necessarily followed it. Now, again, I'm not throwing
my question to you when I look at this chart, Matt, is this potentially the ugliest bullish retracement in the history of technical analysis?
If it is, no, it can't. No,
it's not pretty. Like,
okay, sometimes you got to discount price action to make it make sense. Mm-hmm. You just do, right? Mark, I totally understand what you're saying, because we did officially set a higher high versus a higher low, but you don't have pivot confirmation. I'll just draw you a box and you tell me if that box makes more sense to you. Actually, I got to draw the box. Actually, what am I doing? Seriously, how do I live life today in America without Epic Pen? I need Epic Pen, Chuck.
This is the question on all of our minds.
If you just look at that price action there and you discount the 2 wickety wicks up the top, doesn't that just look like a high base?
Looks beautiful.
Okay, so I got this as a little bit of a high base scenario. I'm discounting the 2 wicks above the breakout channel. They can and certainly could play a role when you look at that from an intraday perspective. It did spend a day up there. It didn't spend a wick up there. It spent a day. It was a legitimate doji up there. And so you got to keep an eye on that. But also when you're looking at this on that 30-minute chart, look at that resistance level. Look at that support level. Look at that support level. Look at that resistance level. I got this at 58.5 as a high base breakout with a target of 59.5, Chucky, and I'm discounting the wicks at 59.41. So I got this as a high base, and so a little bit of consolidation certainly does justify the downgrade. The choppy wickety wick nonsense certainly justifies it, but once again, with energy, you're really talking about crude oil. You couple this analysis, very simple. Crude breaks 85, energy is going to break as well. And so you're kind of tracking them both. Now, when you're looking at a couple stocks to keep an eye on as energy navigates this high base breakout scenario, obviously the 2 dogs come to mind, and that is ExxonMobil breaking out yet again. You got to love Exxon above 65. It's got multiple time frame analysis to ExxonMobil above that 85. Keep an eye on, not 85, I keep thinking about crude oil, 65 on ExxonMobil. You broke out about that. Look at that reclaiming of the 200-day moving average for the first time since before the pandemic for ExxonMobil. Now you're looking at the old support levels of 67, but again, those are minor. When you're looking at where this could go, man, I don't see any chop until I start getting into 70. Major resistance at 75. So keep an eye on ExxonMobil, and then obviously its twin sister, we like to call Chevron CVX here. Obviously, Mark reported a record number of free cash flow on Chevron last week, navigating a breakout as well. So keep an eye on those. Earnings this week, you got quite a bit, but there's only 12 S&P 500 components. ConocoPhillips reports earnings this week. Pioneer Natural Resources reports earnings this week. OKE reports, and then Devon reports. So a little bit of the smaller market cap energy components, the big dogs reported last week. But again, you're really looking at this as a breakout scenario really tracking crude at 85, tracking the energy space itself. I'm tracking at 58.50. So keep an eye on that sector as it tries to find its footing after a little bit of consolidation. Now, the energy space's sister would be the material space, those miners out there, gold, silver, copper, even some energy components in the material space. Little bit of consolidation, very similar to what is happening in energy over the last week. Consolidation, 9 EMA has caught up to it. Typically, when you see the momentum start to build, 9 EMA catches up. You got to like that as a breakout potential. And I certainly do like the material space as a breakout potential. Look at that right shoulder right there. It's 86.60. You break out of that level right there. Should be clear selling
nice
here, Chucky. Look at the hesitation.
Because once again, referencing something you said earlier in the show, those right shoulder breakouts have been money.
Legitimate right shoulder breakouts.
And one of the things I've learned in gambling over 30 years, whether it's poker, sports betting, or the stock market, is when something's working, you keep doing it. You just keep doing it. Those right shoulder breakouts, good technical pattern, and they've been really working. That's a pretty chart.
I like the consolidation. And again, today's only one day, right? It's just a Monday to start the week, but you got to like the price action response here. In the material space, the only stock to keep an eye on is OLN. It's on one of our reports. You're looking at a little bit of confirmation out of a flag-based pattern here today, now kissing up against the breakout channel. And from an earnings perspective, already kind of discussed, but again, we started specialty chemicals last week. We're going to continue the chemical discussion here this week as we get into APD, as we get into DuPont, as we get into ALB. But for the most part, the two stocks that I think are really important from a material reporting this week is your agriculture companies, Mark. They have been on fire for the quarter. Mosaic here has done absolutely beautiful things. A little bit of a consolidation range between 41 and 42 and a half as we approach earnings. Can they justify the price response? That's an open question that Mosaic has to answer this week. And then when you're looking at CF Industries here, CF as well, showing a little bit of a volatility shift at the top end of the range. Same type of question, though. It's had good price responses over the course of the last quarter. How does the market respond to what the price has done, to what these numbers are going to show? Those are open questions for both Mosaic as well as CF Industries here this week. Now, moving on very quickly, let's talk a little bit about industrial. Industrial, similar to materials, but again, we're talking all-time high type scenario breakouts. Looking at the industrial, materials, no upgrades. Industrials, no upgrades. Finance, no upgrades. A slight downgrade in energy due to the shifting momentum. But again, a breakout there just back up to being bullish. So in looking at industrials here, little bit of hesitation, honestly, before the resistance breakout. Man, this thing can go sideways as long as the Russell 2000 can. So wake me when it actually breaks out at this point. But when you're looking at industrial, there is some stocks to track this week from a trader's perspective. And for those of you who are not pro members, get over there to Tackle Trading, become a pro member, get a 15-day free trial, and check out those reports, guys. Check out those reports. The stock and the options report, they bring you the best stocks from a technical perspective every single week. I've been doing this for 17 years now, and I'm going to tell you right now, I can't do it without the reports any longer. They mean too much to me on a weekly basis. I know too much of what goes into the sauce, Mark. They're too good. I can't live without them. That's what I live on. It's what you live on. It's what our community lives on. For those of you not pro members, check out those reports. We go through every stock in the market every single week. So a couple stocks to keep an eye on here in the industrial space. Let's start with RKLB, a little bit of Rocket Labs here, Chucky. This one had an interesting discussion, but most coaches love to close above 14. You see that price appreciate above 14. Looking for some front-running behavior for that earnings going into 16. 16. Keep an eye on that with Rocket Lab. Next, let's talk a little bit about waste management here. Fighting off that retracement post earnings, looking at the 160 handle, looking for confirmation above the Friday close there on waste management. And then railroads. Mark, I've been talking about the railroads for seemingly 2 months now. Mark, how long have I been talking about the railroads?
No, it's been an area of
been a couple
focus, to
months,
say the least.
Right. In fact, how many times have I given the monopoly analogy of how do you win monopoly? You own the railroads, you nickel and dime people.
We'll save that for another day.
You get that rent. I must say, listen, I have one strategy when it comes to monopoly: own the railroads and own the purples.
I have one strategy when it comes to monopoly.
Give me low income housing.
No, be the banker and cheat. So,
okay. You've been busted too many times on that one.
I have. Listen, I'm not afraid to get busted again.
You are not the banker, because when
if they know you're going to cheat, then is it really cheating?
First of all, yes, it is. Yes. The answer is yes. And two, I know you act like a Goldman Sachs banker when we play Monopoly, so I know all of your tricks there, young man. Okay, but yes, own the railroads. CNI looks a little bit of volatility here early today, but certainly like the flag-based pattern. From an earnings perspective this week, guys, 16 components report earnings out of the industrial space, led a little bit by your machinery companies a little bit here today or this week, but no big dogs reporting out of the industrial space this week, just a bunch of machinery companies. When you're looking at XLF, the last of the cyclical areas of the market, XLF coming in rock solid at the 15 handle from a ranking perspective at Tackle Train. Check out the Tackle newsletter for everything in that newsletter, including our sector rankings out there. But that came in at a 15 handle, tied with discretionary for our highest rated sector. Stocks to keep an eye on, really kind of tracking this navigating this 9 EMA here. Obviously, when you're looking at the last 4 trading days, look at it. It kind of wants to go one way or the other at this point, Mark. Kind of wants to go one way or the other. I'm looking at a breakout here, but only a breakout. Got to see the breakout at this point. I don't think you're playing anything as a swing trader off that support level. I think you're too tight against the resistance channel. So everything is coupled with the breakout in the financial space. But man, oh man, am I still looking at 420 on Goldman Sachs here. It wants it. It's just waiting on it. It's just waiting on the sector. Let's see that sector breakout. Let's see Goldman break out of that 420 level. Been talking about
there's got to be a really good Goldman Sachs 420 joke here, and I just can't find it.
I've given like 14,000, but never in the halftime report. Listen, the Miami's hat on. It's all professional. Like, we have to act professional since the Miami Dolphins don't act professional. So in terms of this,
did they lose yesterday?
Did the day end in Y?
Yes. Okay. Fair enough.
They lost. Yes. Goldman Sachs here, 420 breakout there. Yes, it is looking saucy above that level. But it's not that. You're looking at major breakouts here in the financial space for me this week. And when I mean major breaks, guys, I'm talking about those major levels of resistance that could see leg up analysis and has multiple time frame analysis to it. So whereas we're nickeling and diming a daily breakout channel on the financial, I'm looking at major break on Goldman Sachs at 420. I'm looking at if the Bank of Goldman Sachs isn't your cup of tea, well, there you got the CME group also kissing up against 220, a major breakout zone for CME group there. And then when you're looking at travelers here, TRV, insurance companies are going to be hot and heavy this week from an earnings perspective in the financial sector. I mean, you got all MetLife, Allstate, Prudential, all of them report this week. Travelers here navigating a little bit of a breakout channel, so I could certainly see some of these financial reports this week also propelling travelers to either break out or not. I like the breakout potential. So in the finance, I'm looking at 3 stocks that have weekly breakout channels. Let that daily navigation of the 9 EMA versus the breakout channel occur in the financial space. And what I mean by that, guys, let the battle happen. Let the 9 EMA happen. Let the 9 EMA happen. Let resistance happen. wait for the breakout. And then when you're waiting for that breakout, I just have a very hard time seeing if the financial sector breaks out, I would have a very difficult time seeing Goldman's or not seeing Goldman Sachs breakout, not seeing CME breakout, not seeing Travelers breakout, although the earnings are going to have something to say about that one. But keep an eye on that from a financial perspective. And then, Chucky, when it comes into the defensive sectors, we already talked about XLRE a little bit at the first of the show, looking at a nice little consolidation. You're in back of quite a bit of the earnings, but you do have Equinox as well as the SPG coming out later this week. Got a 5-point upgrade due to the quality of momentum and pattern. Looking at this as a potential high base at this point, could form a retracement. And Mark, if it does form a retracement here, that is nothing to shake your leg at. You got to like that retracement. Rounding top comes in. Look at the cluster of moving averages here catching up. A retracement would look good into that. Right now, we don't know though. Right now, you're in the middle of the pattern. The pattern takes time to develop. Stay with us as we navigate that one this week as well. When you're looking at the utility space, every week, we've given it a theme, right? You had bank week, right? Week one, you had bank week, and then you had healthcare week, and then you had these mini, then you had blue chip week. That was last week. You had blue chip week, right? This week, it's utilities. Like literally every utility company reports earnings this week. There are 26 utility companies in the S&P 500. 20 of them report earnings this week. It's all about earnings this week in the utility sector. And when you're talking about those, you're talking about the big dogs, Duke, Southern, those big dog utility companies reporting, Dominion reporting this week as well. So really, to me, this is about earnings week in the utility space. So wake me up when it's over type analysis in the utility sector this week. And then the last two sectors.
And after it's over, you still won't get woke up because it's utilities.
I'll probably be much more excited about something else in the market. Yes, this is par for the course. I can't tell you how many times in the scouting report meeting we're breaking down a technical trend pattern. We're on some company, and finally I'll be like, guys, it's a utility company. Can we talk about something else? Yeah, every now and then you see a great trend and pattern develop in utilities. I've done it, you've done it, we've all done it, but as of right now, there's too many other things happening in the market. I've spent too much time talking about utilities. So let's talk a little bit about consumer staples, hugging the 90 EMA, reclaiming over the last week all your moving averages. Very volatile over the last week, but it's kind of consolidated itself the last 3 trading days. Looking for that 71.5 breakout. Should see a little bit of continued price appreciation. But once again, I just said it was utilities. Let me just say it is consumer staples we are talking about. Stock of note, though, in consumer staples would be Costco, as Costco navigates a little bit of a high base type pattern where we're really kind of looking at it coming into that $500 level. Outside of that with staples, it's all about Clorox, Monster beverages, as well as Mondelez. I just love saying Mondelez. Mondelez is also reporting earnings this week. So 5 S&P 500 companies reporting earnings in staples. None that is really a big market mover. I think staples is going to have one of those weeks that you forget it really, really, really quickly. We're talking Russell 2000 this week. We're talking energy breakouts this week. We're talking technology this week. We're talking bottoming action in communication this week. We're talking a lot of things that won't involve utility. Well, actually, I will have a lot of earnings to talk about in the utility space. Not a lot in staples, though. And then the last sector, and a sector that did get an upgrade at tackle trading last week, or excuse me, over the weekend, was the healthcare space. Healthcare coming in at that 30 handle, a 5-point upgrade from last week's front-running upgrade. You got to like the technical response. Ever since Johnson & Johnson reported from 2 weeks ago, Many of you in the halftime report were with us that moment when we were analyzing Johnson & Johnson. And I said on Johnson & Johnson, I said, these numbers don't justify the price response. The price response shows you the appetite for a company like this coming off the lows. From that point on, you've seen a market be nothing but consistent. From an upward movement in price perspective, we have not even tested the 9 EMA. Momentum is certainly building here. One stock to keep your eye on from a short-term trader's perspective would be Abbott Labs as it navigates a major breakout of 130. But stocks to keep an eye on from an earnings this week. And again, quite a bit of companies reporting in the healthcare space this week. 26 components reporting. That most stocks reporting in the S&P are in healthcare again. But again, healthcare has a massive. They have so many stocks in healthcare.
There's so many stocks.
But it's led by companies like Pfizer this week, Amgen, as well as CVS here. And so you're really talking about not some of your big dogs, but again, just a healthy dose of healthcare. But that is Sector Roundup. Lots to say in Sector Roundup here today.
Listen, a lot of good stuff. There's a lot of nuggets there. Some of the things that pattern on X, the two nuggets that I had that I made notes of for my own personal trading. Watch comms. If earnings were good, bottoming patterns, if you get a signal, I'll find some way to option play that or go long there. That made too much sense. And that right shoulder potential break on materials. I mean, those were the two that stood out to me for my preference. But there are a lot of good nuggets there, Matt. A lot of good nuggets there.
Well, in Sector Roundup, I like to go through, honestly, I like to give a lot of detail into what we're seeing in the sectors. And, basically in Sector Roundup, I like to give what we're seeing out there as a community, because we have a lot of very prolonged and thorough discussions on all of these stocks, all these sectors, both on Friday during the Scatter Report meeting and as we dial in those reports coming in on Saturday. So I like to give that detail to our community.
Yeah, no. Listen, long show, good show at the wrap-up stage, but we're not wrapped up in the tackle trading community today. Our coaching mastermind group for individuals that are in our coaching program, that is tonight at 8:30. I believe my brother Tim, and I can't remember the other host, but that is Tyler's tonight. That's a nice, polite duo. That's a nice, polite duo to give you some good education.
I know the conversations they have in the coaching mastermind group. It's a very good duo for coaching.
So coaching students,
we work on some mindset stuff in coaching.
Yeah, I mean, we focus on a lot of mindset stuff.
And so having Tim there and Tyler, such a wonderful trader, two of the best coaches I know. They're going to have a lot of fun in the coaching mastermind. So if you're part of our coaching program, you do have the coaching mastermind, and we're also dialing in the coaching Discord link this week as well. So there will be some communication from us to those coaching students regarding communication within Discord this week. And as always, guys, for any pro member, you can get access to me in the mastermind group for the step system on Discord, Coach Tim at the coaching one, and then obviously Coach Mark, you run your Cash Flow Vikings Discord communication over there on Tackle's Discord as well. So the Discord link, guys, was in all of our scouting reports. It was in our Tackle newsletter this week. And so if you have not had access to the Discord channels and our communication in those Discord channels, make sure you're checking the link in any of our reports to the pro members. Remember, Discord is a communication device that we will be using for the future at Tackle Trading for pro membership and pro membership alone. So definitely get those links for Discord in any of our scouting reports that you got over the weekend.
Yeah, and also, like, if you want a little guide on how to get onto Discord with Tackle Trading, email me at team@tackletrading. I'll send you all of the information. And we got Trading Justice podcast here in going to be released later today. Going to talk about Bitcoin proxies. But Matt, busy week ahead of us. What's your final thought for the community?
It is a busy week. You got a third of the S&P 500 reporting earnings. A lot of those names are going to be a little bit less important, but they will drive the overriding theme. But this is going to be a central bank week for me. You know how much emphasis I put on the central bank from an analysis perspective. And even though I disagree fundamentally with many things of who they are and what they do, They are the #1 market participant, and you have to understand what they do. So it's
Respect
hard.
their authority.
You got to respect it. And the moment you disrespect the Fed reminds you of who they are.
So listen, for a busy week, come back all throughout the week here at the Halftime Report. Tackle Trading Community.
Like and share, Team Tackle.
We love you.